Hi everybody, I'm Clara Hermit and welcome to another Breaking the Mould. This is of course our regular market review with our investment research director, Russ Mould. Russ, what's the fuss?
Action-packed fortnight coming up, Claire. We've actually got a third of the FTSE 100 reporting either first half or full year numbers or doling out a trading statement in the next 2 weeks alone. But amongst all of that lot, the most important things, the real fuss items of the fortnight are beer, ice cream and telly.
Should we dive into ice cream?
Yeah, it's a good start. That's Unilever's the company in question, with first half numbers on Thursday the 24th. They own Ben & Jerry's and Walls.
That's not all they own though, is it?
Oh no, not at all. They're enormous in personal care, things like VO5 and Brill Cream, really important things for some of us. Very good in home care, comfort, anything you stick down the loo or the sink or in your washing machine. And huge in food with brands like Hellmann's mayonnaise and Knorr, for example. But despite all of this battery of brands, the shares have actually been quite disappointing over the last 12 months. They've fallen around 7%, the market's been going up, and the major reason is people used to be very excited about their emerging market exposure, now they're quite worried about it. And there's actually been quite a slowdown in business there. If you look at Unilever's first quarter numbers, volumes were up just 1.9%, though prices were quite firm at up 1.6%. So when you look at the interims, check out those trends, also look at cash flow, any more further brand disposals and the potential for dividend increases.
Okay, so we've done ice cream, one of my favourite things. Should we move on to beer, another of my favourite things?
You're a beer girl.
Yeah.
Oh, you continue to go up in my estimation. Fantastic. Yeah, beer. SAB Miller is the company here. Actually, again, a very similar story to Unilever, at least initially. People got the markets having enthused about emerging markets, then got very worried about them. Miller shares came off quite hard.
They've rallied pretty strongly since then,
Hugely, from 27 quid in March to £33 now. They actually produced a first quarter trading statement the same day as Unilever. They'll have the same issues to address. But the reason really that Miller's shares have rocketed is bid speculation. AB InBev, the brewer of Budweiser, is allegedly sniffing about, having a bit of a taste potentially at SAB Miller's brews, which include Foster, Peroni and Grolsch. So we'll see what their boss, Alan Clark's got to say on the gossip. Probably a discreet silence, I would suspect. But again, it'll be all about volume and revenue. Lager volumes in the full year last year were only at 1%. Sales and profits were flat. Big problem there for them was a weak dollar and a weak rand. Those issues haven't gone away though. Okay,
so we've done ice cream, we've done beer. It's sounding like just a normal Saturday night for me, but it wouldn't be complete without the last thing that we're going to talk about, television.
The telly. So we've got Sky results coming up on the 25th and ITV on the 30th. So let's start with Sky's full year numbers. The shares here are basically flatlined for 12 months. And there's been a few issues here, basically concerns over slowing profits growth, because there's been a lot more competition. BT have now rode in, whisked the Champions League rights from underneath Sky's nose for 897 million quid, and Sky's also been investing very aggressively in its platform. You've also got some analysts wondering, will they buy in Sky Deutschland and Sky Italia in Europe? So given all of these uncertainties, that's really why the shares aren't going anywhere and profits estimates aren't either. But income fans will remember, company's increased its dividend every year for the last 10, and consensus is looking for another hike to 31.7p in these numbers, alongside pre-tax profits of around 1.2 billion.
Okay, that's Sky. What about ITV?
ITV really quickly. Shares again have come off quite hard. Here the story's been interest rate increase concerns, which I know sounds a bit odd, but the market's a forward-looking mechanism. It will price that in a long time before it happens, and obviously that knocks on to the economy and potentially advertising. That's a big driver for ITV's earnings. Though I know our boss Adam Crozier will talk a lot about programming and their successes like Downton Abbey. For the full year, these are interim numbers, the market's looking for about a 40% increase to 669 million quid. Keep an eye again on any signs for advertising trends. Remember the Brazil World Cup did fall into June, so they've copped a bit of the benefit from that, even if England went home early again.
Yeah, they did indeed go home early. This has been Breaking the Mould. We'll be back with you in 2 weeks' time. Until then, take care and goodbye.